And then if you write down all the gappers that fail and all of the variables that go with it, if you track them, the volume was this, the float was this, the filing said this, the news was this, the sector is this. If you do that for every stock that gaps above 25%, what you're going to find is in a month, you can look at that data and say, wow, look at some of the ones with this news ran, but the ones with this news didn't run. And the ones with this volume and this float, they ran, but in this volume in this sector somehow with, and this volume in this sector doesn't. And you start picking things up, and then all of a sudden, before you know it, you're like, I've saw 7 of this type of stock run.
Yes.
So the 8th one probably is going to run. Welcome to the SteadyTrade podcast, the very first podcast where Kim is another year older, and that's a new podcast for her being in a new year, and it's me being back in Newcastle in the United Kingdom. So I might get that twang back to my accent. And it's also a pretty unique episode because we're going to reference some material here, and we're also going to have 1 or 2 attachments to give away. So there's a free giveaway of material to help you study more effectively. And Kim is a busy working woman, but
it's true.
So when she gets the time to study, it needs to be effective.
Yes.
So I'm going to take you through kind of some of the most effective ways I've learned how to study stocks.
You're
Stocks.
tough.
How do you say it?
Is that an American version?
New York.
Stocks.
How's it going?
It's going really good. How about you?
Yeah, like I say, you would have saw the last episode with Tim Bourne. I'm off the back of flights from Dubai to England, living English life. And just to tell you very quickly, and we'll get into it, but I miss the culture, the heritage, the personalities, the community vibes. Dubai's good, but it's only got the sun. That's a bit of glitz, and it's got the sun, but they're the main things. Doesn't have heart. You know what I mean?
The UK is a special place. I've been fortunate to spend a lot of time there. I have a lot of dear friends. My closest friend is Jill Ross, who is still living there. And I have to say, every time I've gone to England, it was really hard to leave.
Wow. You haven't been to Newcastle, though? Not yet.
No, I haven't. Did I go to Newcastle? I did go to a couple of obscure. I remember seeing thatched covered roofs. My friend, Lee Watkins and Jill, we drove to his mom's house, and I was like, oh my God, you actually have thatched covered roofs on houses. It was like an amazing thing. I thought that was just like in the old movies. No,
I think mine's like that as well. But
it's a beautiful place. So I'm happy you're home. I think it just seems to be making you happy, so that's good.
No, so far so good, and it's very, very, very cheap, which means the trading profits go a lot longer and a lot further. But
good.
I've been at this game pretty much full-time trading now, so it's crazy. So I've just kind of transitioned to full-time trading. So I thought it was a good, relevant, poignant, on the money, tip of the iceberg, on the nail, on the head, time. How
many more metaphors can you come up with? All in one.
Time. I can't think of another one. It's the golden circle, maybe. I don't know.
Okay,
it's the end of the black hole. Anyway, it's time for me. What were the most effective study traits to get profitable? Because one thing I'll always know about Tim Sykes is he's always talking about studying.
Yes.
How much time are you studying? You've got to study a tons and tons. But the first question everyone gets, like if they're not part of his paid for course or the challenge or whatever, the first question a lot of people ask is, study what? I'm ready. Yeah. I'm motivated. You've motivated me, but study what? So I really wanted to just take people through some techniques
It's
and
great.
ways knowing what's effective and
It's
not.
going to help me. It's going to help me because I have been so busy just with coaching clients that I haven't been able to study just for the last couple of months. And even now I'm kind of mixed up about which way do I go back to listening to his recordings? Do I go back into reading the book, you know, that Jamil wrote, like, and Tim
Yeah.
wrote, like, where do I begin? So what is your advice around that? If somebody has limited amounts of time, where should they be putting their
I mean,
effort?
I always think the best way to learn is to do, and I've always thought that. And don't do it with a lot of money, because I didn't even do it with a lot of money, and I still went down 18 grand, 16 grand, something like that. The best way to do it is to do it really, really, really small.
Yeah.
But before you do, you've kind of got to know what you're doing. So, like, say, I mean, a good way to add some structure and to facilitate this podcast and someone's learning process would be to let's map out a year, and this won't be spot on. We're doing it off the cuff, but
Yeah.
say no month 0 to 2 of when you're getting into it. You just have to watch like video lessons, and if you can get your hands on any kind of DVD. Trader Checklist was great. I know Tim Sykes is right now, he's got some $80 course. I don't know if that'll still be available, but it's basically a 30-day introduction. But you have to watch some sort of introductory guides and courses or lessons, exactly like Trader Checklist, because the first thing that you need to do before anything is to know the variables that form a good trade. And the SteadyTrade podcast, we actually go through all of them. So if you don't want to pay for it, it's actually free. There's a series on the video section.
When did we do that? We did that in Introduction to the Variables almost a year ago, you think?
Yeah, I'd say it's about 11 months ago. Yeah.
It was like, it was 5 parts, 4 parts, 5 parts.
Yeah, I think it was like pretty much a main use series, but
would you recap
learn them. Yeah. I mean, look, you can go back. The Tim Sykes' month course, I'm sure, will outline them. Trader Checklist outlines them. We've outlined them on SteadyTrade. If you watch different people's YouTube videos, like on StocksToTrade, you'll catch them. But I'll just remind people so they know what they're looking for. You have to know what moves a stock, because that's what you're doing. I mean, we're ultimately buying and selling stocks. So if you're buying it or selling it or shorting it or covering it, you need to know what's going to make it move, because if you know what makes it move, and then you know how much it can potentially move. And then if you know how much it can potentially move up or move down, then you start figuring out the opportunities of when you want to buy and when you want to sell, or when you want to sell and when you want to short. So the things that impact or influence a stock to make it move is, number one, the volume, because how many people are buying and selling is really important. The daily chart is 2, because is the chart a good chart? Is it a bad chart? If it's a good, it'll be ascending, and there's more chance it's going to go higher. If it's a bad chart, like a lot of micro caps, it's going lower and lower and lower. So you've got volume, the daily chart. You need to really be considering the float. Is it a high float? Is it a low float? Because if it's a high float, it's going to take more volume for it to move. If it's a low float, it's going to take less volume to move. The lower floats can be more volatile, while the higher floats a bit more boring in the mid cap, high cap land of Facebook and Twitter and BA and the slightly more volatile, higher real companies are the likes of Tesla right now after it's split, and Netflix. And then we need to know what's the news.
Can I ask just one question there about the float? Well, do you think somebody who is not, do you feel that that's easy to spot, the high or low float, for somebody who's new?
Yeah, for sure. Because it's just, I mean, I actually have a program that I use. I've just started using it, called flash-sec.com. And flash, like site-sec.com. And they load all of the SEC filings, and they load the float for you. So you can immediately say, oh, the float is 10 million, but 50% is owned by the institution, so it's only 5 million. And then it's got all of the dilution, saying the company is planning on diluting all of its stock customers by this amount. So you remember the SEC filings and stuff?
Totally. I mean, I remember us talking about.
You've got to go through all this stuff. Like on flash-sec.com, you just type the ticker and it tells you this company has these warrants at these prices doing this dilution. So that's a really good way to know dilution. But ultimately we're thinking that, like I say, the volume, the float,
Daily
how much it
chart.
can move, and then in terms of float, how quickly can it move? Daily
How much it
charts
can move. How much it can move. Just tell me
on.
more about that.
So if you remember, volume and float work together.
Yep.
They're like a marriage, right? So high volume, low float, it means it can be extremely volatile because a high volume is a high demand and a low float is not much supply, right? So the more demand with the least supply, the more it has potential to really rocket. So if you can imagine, and this is particularly for the newer people, guests, learners, students,
Mm-hmm.
if a stock has good news, say like a company with a very low float, which means a very limited amount of shares, if that stock has really good news, it's cured coronavirus. Everyone wants to buy it, so the volume is going to be really high.
Yeah.
But the float, the supply, what if it's really small because it's a very small company?
Yeah.
Then the price is going to shoot because everyone wants to buy it. So but there's not much available of it. So the
Right.
price goes higher and higher and higher and higher. So the stock goes up and up and up and up because everyone's like, I'll pay anything for this because it's so
Right.
undervalued and there's not much. That's
So,
when things get
you're
ridiculous.
looking for that. That's one of the variables you're looking for, because that then potentially helps you determine if that's where you want to go. If that's the place you say, okay, I think this is potentially valuable. I know there's not a lot of it available. I'm positive this value is going to make the price go high. And that helps you kind of predict what you think is going to potentially take place.
Yeah, but exactly. But there's two ways of thinking as well.
Okay.
So you can think, I think this is a great deal, which means every other trader is going to think this is a great deal.
Right. Right.
Which means all the traders who are short aren't going to short this because it's a good deal. So
Right.
everything becomes like a bullish factor. If everyone thinks it's going to go up, it's a self-fulfilling prophecy and it just goes up.
Yeah. Yep. Makes sense.
So yeah, so I mean, not to go too much in them because we've got episodes on them, but you definitely
Yeah.
have the volume and the float and the work in harmony with one another. The daily and the intraday, which to an extent also work in harmony with one another. The news and the SEC filings, which kind of link together quite closely because how good's the news? What's the actual background of the company? Is this news going to really change the background of the company? Or is it weak news and they've got a lot of dilution? Or is it strong news and they've got no dilution? So the news and the SEC can kind of be paired together. But you need to understand these variables. That's what I'd say in months 0 to 3. Get some sort of grip of these variables and how they work and which variables are more important than others in specific times.
So the first 0, you're saying from the beginning for the first 3 months, put the focus on understanding these variables, recognizing what the variables look like, the different iterations or combinations of them. That is the most important thing to learn for the baby traders who are just starting out.
I mean, I would say so. I'd be saying learn what they are and then look at the marketing and just look and say, what do stocks do that trade 100 million volume in a day? What do stocks do that are low float? What do stocks do that have, say, news that they're going to, a very bearish news release that are often short as debt consolidation? If any company is consolidating debt and it's up because of it, I generally short it because it's going to come down, because all the company's effectively saying is, we've consolidated we're a terrible company right now.
Right. We're in debt.
We're in a mess. We've figured it out. So the stocks always gap up because they're like, look, we've figured it out. But to me, that means you have solved a small problem for now, but it's probably going to be a problem in 6 months. So it's not really, you've just temporarily patch holed. You've put patches in like, this debt's consolidated.
A Band-Aid.
Yeah, but people who get in debt, they're in debt for a reason. Do you know what I mean?
Agreed.
So
totally.
It's going to take time and years to sort that out. So the fact that you consolidated your debt is probably just you consolidating your debt before you consolidate your debt again, which we've all done as
Yep.
humans, and businesses are the same.
Of course. But you're trying to find the companies that are hopefully doing things a little better than just the old standby way. You want to find.
So I mean, like I say, I learned what the variables mean. So and try and think, what are the high volume, low floats doing? What at stock that trades high volume, 50, 60, 70, 80, 100 million. How does it do on the day? Does it finish up? Does it hold its highs? How does a high volume, low float do compared to a high volume, high float? Which news makes a stock run? Which news makes a stock gap up and then come down? What news makes a stock gap up and run 2 or 3 days? And then what happens when you combine the low floats and the high volumes with the good news compared to the bad news? Do you know what I mean? You start watching them.
All right. So here's a question. So I think part of my challenge is when I have some extra time, there's a part of me that wants to just sit and, you know, how Bowen always says, just watch and sit in the chair and watch the market. And there's a part of me that wants to do that, but then there's also a part of me that feels like I still have to listen probably to Trader Checklist, or what's the other Sykes course that you suggested I
There's
watch?
Just like some $80 30-day course and how to make millions. Yeah. But
how to make millions, right?
Yeah.
Do I want to take my time and listen to those or read the book? Or do I want to just watch the market? Or do I want, like, you know, it's like, how many hours do you have in a day? And I'm never sure which one. Should I just watch the market? Should I spend my time looking at those variables? Like, it's tricky. It's tricky to figure out which to do. You know?
No, but I mean, the thing is, though, I mean, watching the market in the early days look, if you open the market up and you're just looking at it thinking, I don't know what I'm looking at, which I used to do all the time, right?
Yeah, I hope so.
No, I used to watch Trader Checklist or the first penny stocking DVD and think, no, trading me, I've got it. The way Tim Sykes explains it, and
he makes it sound so simple. He makes it sound so like his ability to make it sound like common sense, like go to Main Street, make a left, take a right on First Avenue. Like you're just like, oh my God, this makes so much sense. And then you walk away from it and you look at and you're just, I was like, oh my God, this doesn't look as easy as he made it sound.
No, but when he's explaining it, you're like, that totally makes sense what you're saying. So you're saying it's easy, and then you're explaining it, and I easily comprehend the explanation.
Yes.
But then I open the market and think, I don't know what I'm doing at all. I don't know anything about what I'm doing.
Exactly.
Like this, I am not even don't know what I'm doing. I'm clueless. I have no clue.
Yeah. Totally. That's how I feel. That's how I feel every time. And it's confusing because there's that confidence. And I don't think, you know, when I think back to what he says in the course, like, it's not that I remember him saying per se that it's easy, but what I remember him saying is that if you listen to these variables, it becomes simple. Like he's saying there's a simplicity to what his kind of methodology is, but I don't think that he's saying it's easy. Like I think things can be simple and not easy.
No, he says he says it's the hardest thing anyone will ever do.
Yeah.
Says that anyone can learn it and anyone can learn it. And if you follow the rules, it's quite easy.
But it's like the rules, keeping track of the rules when you're in the wild.
Yeah.
It's like reading a camping book. Like I told you, I just went glamping for my birthday. Yeah. And, you know, the pictures on Airbnb were really beautiful. And then I got there and I was like, ooh, this is really more camping than glamping. and the reality is always different when you're in the wild than in theory. And that's what I think.
Yeah,
for the
but
new
I mean,
traders, that's
yeah,
the hard part.
I mean, I can honestly tell you, learning to trade is the hardest thing I've ever had to do ever. Like I've never gone through so many highs and lows, and as someone high and low, trading is not good for me, right? Because it makes us even more high and low than I already am.
Yeah.
But now it was the hardest thing I've ever had to do, and I went through the most highs and lows I've ever gone through, if anything ever. But now that I've got it, it's too simple on a day-to-day basis. There's no mental challenge at all. It's super simple. Like when he explains it's super simple, I'm like, yeah, it's super simple.
All right. So the first 0 to 3 months, you're saying get clear on the variables, get clear on the volume, understand the daily chart, understand the float, whether it's low or high, understand or be connected to the news and or the SEC filings. And you said get connected to how much the stock can potentially move. What would we call that?
No, but I'll just say one quick thing. I don't think trading's too simple. Like you can go $2,000 down and you're like, what have I done? So it gets too simple, then you make a mistake. I just want to add that.
Yeah.
But basically, the question was, how much do you look at the screen and how much do you study?
Yeah.
And that's it. And the answer is, if you're looking at the screen and you don't know what you're doing, you need to go back to studying more, and then do more studying than screen time, and then eventually you'll pick things up slowly. Once you learn enough, you'll pick things up in the screen. The screen time will get easier and you'll start learning. But just a reference, so the first 3 months, learn the variables, learn what makes a stock move, get a sense of what you think is making a stock move in certain situations. Is it the volume? Is it the float? Is it the news? Is it the dilution pushing it down?
Could it be all of them?
Is it the intraday? Yeah. Like if the stock closes at its highs intraday, what does it do on day 2? Do you know what I mean? If the stock has 100 million volume, what does it do the next day? How many on the daily chart?
You want to, especially as a beginner, you're saying you want to maybe track that stock from even before you're putting money out there. You're just kind of watching it and seeing if you can identify all these variables. Okay.
Yeah. So basically, I mean, look, it sucks. Like there's tons and tons of free stuff on the internet. You can learn a lot of this stuff for free, but like, I mean, obviously I went through the challenge. If you want to give in a specific, like nice back catalog from great traders like Tim Grattani and Mark Crook, then you need to go through the challenge. But so the first 3 or 4 months, just get a sense of what makes a stock move and why. That's it.
Okay.
And then after you've understood every single variable and you've got a feel of it and sector as well, because you got different sectors like the shipping sector, the biotechnology sector, pharmaceuticals, shopping, which is all going down, airlines. Yeah.
Well, not online shopping. That's not going down.
Online, for sure. Online,
brick and mortar. That is just, I'm just seeing that in the town I live in. You know, it's decimated.
Yeah, it's dying. It's
sad.
Dying thing. Yeah, I mean, look, I've just moved home and I've just ordered everything off Amazon next day delivery. It's just easier than going to the shop. Do you know what I mean? The trading desk and stuff.
Do.
But so once you've got a hang of what makes a stock move and all of the different variables and you understand them, then it's always the time to find the pattern that matches and suits and reflects your personality. Starts with the basic question of, are you long or are you short? Eventually,
How long did it take you to find that particular style?
Long time, because with Tim Sykes on the silver videos and stuff like that, like obviously you watch other traders and other traders will tell you in real life, on a course, on a video lesson, on a DVD, free or paid, whatever, it doesn't matter. Traders will tell you, oh, this is this pattern, that is that pattern. So you need to find out what the patterns are by watching what a ton of different traders are doing. So Tim Sykes would always say, look, buy the first green day, dip buy first green days. He's got a ton of examples of how to do it. Couldn't dip buy the first green day to save me life. Messed it up every single time. Can't buy. So first green day is on the daily, it's the first green day of the news, right?
Okay.
I couldn't buy the first green day to save me life. Try and get a good price on buying when good news just comes out and the stock's just starting to run. Buy the first green day. Roland both can do it excellently. I'm terrible.
What was hard about it for you? Just so I understand.
Well, it's not what was hard or what was easy, because all of the patterns are easy-ish. I can explain them to you on a PowerPoint and say, this candle pattern is this, call this, and this candle pattern is this. First green day is when the news comes out and it gaps up. That's the first green day. Does it close green at the end of the day? That's the first green day. What I couldn't do is be profitable on it, right? no matter what it is, no matter how much I studied it, no matter how many times I tried, no matter how many times I tried to filter the variables, which we've just gone over, the float, the news, the catalyst, the
Right.
filings, I could not intraday daily. I could not buy first green day and make money. Couldn't.
Wow.
But I could short them. I was very good at shorting first green days. But then it's a
Interesting.
different pattern. It's called a stock that gaps and fails. It's like a gap fail. Derogatory term is gap and crap. So
Okay.
it comes up in the early hours,
Yep.
and then when the market opens at 9:30, it goes all the way down. So I'm very good at shorting first green days, but they have different names. So you need to basically find out if you're a long or a short. Ultimately, do you want to buy these stocks to make money, or do you want to short them? And I'd say between months 3 and 9, 3 and 12, you're going to spend that time finding out what kind of trader you are. Maybe between 3 and 6 months, you'll kind of think, I'll try long and I'll try short and I'll see. Paper trade, trade with very small size. But between months 3 and 6, you need to be learning what these patterns are.
Okay.
And then how to trade them. So to give an example of a few patterns, the first green day is when news comes out or whatever, and the stock gaps up. And then it opens at 9:30 and has a big green day, big green candle, because it closes at 4 o'clock higher than what it opened.
Right.
Or higher than it closed the previous day. That would be a first green day. First red day is when, say, the stocks ran 1, 2, 3 days, and then on the next day it opens and it's gapped down, so it opens lower than the previous day closing price, and then it'll drop and have a red candle, and that's the first red day. So you need to learn these patterns: first green day, first red day, gap and go, gap and crap. That's pretty much it. There's not really that many multi-day runners, multi-day breakouts.
So Stephen, you're listening to Grittani talk about, finding these, having a profit on the green days, and you attempt to duplicate that and you bump into it not working for you. And so is that when you thought, I'm going to try to instead short?
Yeah, exactly. I mean, first of all, you look at the traders who are long biased, and the long traders will say, I trade this bullish pattern, I trade this bullish pattern. Could be first green days, could be multi-month breakouts, could be OTC breakouts, it could be 52-week high breakouts, it could be dip buy-in, panics. They'll say, oh, these are the patterns. And you'll just look at them and think, which one do I think I could be best at? Which pattern do I feel comfortable with trying? Maybe I don't want to dip buy panics because it looks too scary and it's too volatile, and I'm not going to be quick enough at that. Maybe multi-month breakouts, you think, oh, I really see those lines on the daily. It's just what resonates, what do you get?
Yeah.
What clicks
Yeah,
fastest.
Totally.
And
when did you realize overall those different patterns? Was it because you began to just see certain patterns quicker than you saw the other patterns that you began to kind of lean into your style?
It's just intuition. I mean, first of all, you're thinking, I'm a long or I'm a short. And then basically I was like, nah, I'm short. I tried it long for 6 months, lost all the time.
Yeah.
So I went short, and I saw this pattern where I was like, I kind of spotted it from seeing the market open over and over and over. Every time the market opened, all these stocks they'd either run 50%, or this is hypothetical, they'd run 50%,
right,
or they'd fall 50%. And I'm like, if I can find out if the stocks that gap up like 30% or more, if I can find out which ones run and which ones run 50% and which ones fall 50%, and they generally do it really quickly within the first 30, 40, 50 an hour of the day. I'm like, I can make like 20% on the ones that go down, and I just need to figure out which ones do and avoid the ones that go up.
Wow.
Do you know what I mean? I'm like, well,
I do.
It's the most risky, dangerous strategy in the market. Perfect for me because I love gambling. I make money really quickly. Perfect for me because I'm lazy. But also, it's the most difficult thing to do in the market, arguably. Great for me because I love a challenge. But once I've mastered the challenge, I can be lazy.
Yes.
So,
I hear you.
The pattern reflects, everyone else would trade the safer first red days. And I was like, nah, you don't make enough money. It takes too much time. Now I
Yep.
trade them
Yep.
all, right? I've mastered all of the short
Yeah.
patterns pretty much
Of
now.
course. Of course. Did you not say at the beginning, I feel like when we first started, when I first came on board with, SteadyTrade, I feel you said that you were able to meet somebody and then determine what their preferred style is. Am I right about that? Did you say that you could do that?
I mean, I don't remember saying it, but it could definitely be something that I would say, because
Yeah.
a stock pattern and a trading style totally reflects a personality.
Yeah.
Totally.
Yeah.
Like Mark Crook is a trader. I've met him a few times. He will not take on. He will say my strategy. He'll be like, it's taking on unnecessary risk. It's stupid. It's too risky. Why would
Yeah.
you do that?
Yeah.
But I'd say nothing else excites me than this risk.
Yeah.
Do you know what I mean?
Totally. I do. And it's so interesting, I'm always coming from trying to understand how people tick. And one of the things recently that I've begun to explore is, I don't know if you've heard of attachment style, but all of us have a certain kind of attachment style based on, our caretakers or parents when we were little. And the style that we have, the disposition we have, shows up in the way and the kind of relationships we have later and in the kinds of situations we find ourselves in later. So lately, I've been kind of looking at, I would like to know a trader's attachment style to potentially be able to predict where they might potentially, default in the way they trade. So I'm still exploring that, but part of what I'm hearing now from you is you knowing yourself enough to realize, okay, I like to have adventure, I like to have risk, and I can, it's funny because you sometimes, you call yourself lazy, and I think you are so not lazy. You enjoy your leisure, but that's not the same as being lazy. Like, enjoying leisure is different than being lazy. You will enjoy your leisure, but after you've worked super, super hard. So
Yeah,
it's,
no.
but that pattern suits you and perhaps doesn't suit, some of these other traders you talk to, but theirs suits them. And that's their style.
But you're right though, no, because I mean I was reading a book of Everyone Say Goodbye, and a lot of the comments were saying you're the most driven person I've ever met. So it's in my head a little bit. I just like to play it down, but no, I work hard for sure.
You do.
But the attachment style is it's $1 million theory if you break it, because if you can figure out someone's strengths and weakness, well, first if you can figure out what, I mean, on an education purpose for a new trader, you can figure out what trading style best reflects their personality. You can point them in that direction and say, just explore this first because it probably might be the one for you. And if it's not, try B and C.
Exactly. That's what I think. And there's another something too. I just got certified and I just spent the last 2 weeks getting trained in a judgment, the ability to have, it's able to assess 70 different pieces of somebody's judgment. And so I think this is certainly, helping me understand myself more, but ultimately I hope it helps, the traders I work with. If we can understand their judgment, what their relationship to their judgment is, then I think that's going to in turn be able to help them also understand that the more you understand yourself, I just feel like the more you're going to potentially be able to go down the path that's going to help you be a successful trader.
No, absolutely. I mean, look, if you can tell someone your personality has a tendency to not cut losses off, you're tending to be aggressive, so you really need to work on cutting losses. Every trader needs to work on cutting losses as it happens. But yeah, no, it's an interesting practice, or it's an interesting theory to help people in the future. I mean, ultimately, you just need to help people get to know themselves faster.
Yeah. Exactly.
Right, that's what it all comes down to.
Yeah.
How can you make someone understand themselves quickly?
But don't you think trading is like the perfect place to get to know yourself? Like, it's forcing you constantly to have to be with how you look at the world, how you respond or react to the different, challenges that are put in front of you every day.
I mean, I think the best way to explain it is it defines who you are as a person.
Yeah.
And I hate to say it, it's difficult to say, but there's people who win in life and there's people who lose in life,
Yeah.
and it separates them. It separates the winners from the losers. And I don't want that to sound in a gloat way, because everyone
No,
can
I
win in
get
life
that.
in different ways. Everyone can win in life in different ways. You
Yeah,
can win by
for
having a
sure.
perfect family. You can win by being good at trading, but it really separates the people who really work hard to the ones who don't.
Yeah. Yeah.
Um,
And that
I'm not sure.
dedication, like where is that dedication? Uh, where is it going to be poured into? And even believing in yourself. You know, I think
That's a huge thing.
this can really be demoralizing, trading. And
Yeah,
because
it
it is
is.
forcing you to be with the places you're not disciplined or where you are attached to outcomes. And so, you know, I think being able to be perseverant and emotionally kind of strengthened, where you can be, not take it personally, that to me seems to be
Yeah,
the
it's also your suffering
differentiator.
tolerance. It's also how much you can
Yes.
handle suffering.
Yes, I agree. I
It's how much can
agree.
you handle suffering without quitting. And sometimes people can have a high pain threshold.
Yes.
Yeah, but I mean, look, it's how much you want it as well, right? Because
Yeah,
I don't want to
for
say
sure.
someone who quits early is a bad person. Maybe they just
Yeah.
don't want it much, or maybe it's just not for
Yeah.
them. Do you know what I mean?
Yeah, for
There's nothing
sure.
wrong
Or
with. I'm
there's
not saying if you
something
quit trading,
else.
you're bad.
Or there's something else that is their passion. You know, like
Yeah.
I think you've said that many times. If this you can't do this if you don't feel it's for you. Like if you don't really enjoy it or feel like it suits you, don't do it. Like you have to be so dedicated. You can't do this kind of half-assed.
Yeah, but and also it doesn't have to be your passion straight away, right? You don't have to be like, because Tim Bourne's like, oh,
Mm.
I was reading the New York Times when I was 7 or whatever he says, right?
Yeah, exactly, exactly.
You don't have to be like that. Like, I
The
didn't
Wall
even
Street
know.
Journal.
Yeah, like he's like, oh, I read it when I was 6 and I learned how to read for the first
Yeah.
time or whatever. Like, you don't have to be reading the Wall Street Journal
Yeah.
when you're a child. Um,
That's so
I've
funny.
never read the Wall Street Journal in my life, right? Like, and I never will probably. I don't want to read it. I don't care.
You do care. You do care. You're just getting
Don't
your
care about the Wall
information
Street
someplace
Journal.
else.
Nah, I
You're
don't care
getting
about it
your
whatsoever.
you because you're part of the modern generation. You're able to get what he gets from the Wall Street Journal online by reading the SEC filings. For God's sakes,
You need to put a
you're
girl on TikTok telling us it, and maybe on TikTok of some girls doing dancing and then telling us at
a
the same
girl in a
time. Maybe I'll
bikini.
listen. I
A girl in a
like
bikini
every other
telling you to
one on
subscribe.
TikTok. I was like,
All right, so 0 to 3 months, understand the variables. 3 to 6 months, begin to get clear on what patterns potentially suit you. And then about a year into it or more, what then?
yeah, I'd say so. It depending on how fast you learn between like what you're obviously going to be starting to, like the most important thing is you're going to be start trading. So once you start trading and you start trialing these patterns, you need to organize. You need to basically organize a document, whether it's a PowerPoint or it's an Excel, and you
Mm-hmm.
need to find out what you're good and bad at, right? So you're thinking, okay, I like the first green day pattern, or I like the panic dip buy pattern, or I like the multi-month breakout pattern. Maybe if you're adventurous and you've got time, you want to try 3 patterns at the same time, or maybe if you want to be careful, because first green day might come once a week, right? So you might only
Right.
trade one trade if you only trade to explore one pattern. But you don't even need to trade. You just need to write down in an Excel, this is the first green day pattern because it fits these criteria.
Yeah.
It gaps up and it goes that day, or any stock. Maybe you could just track on Excel every stock that gaps more than 25%. Which ones have green days? Which ones have red days? And then you start thinking, okay, the ones that have red days, you write down how much volume did it have? What's the float? What's the sector? What's the news? What's the SEC filings, the dilution? And then if you write down all the gappers that fail and all of the variables that go with it, if you track them, the volume was this, the float was this, the filing said this, the news was this, the sector is this. If you do that for every stock that gaps above 25%, what you're going to find is in a month, you can look at that data and say, wow, look at some of the ones with this news ran, but the ones with
Yeah.
this news didn't run. But the ones with this volume and this float, they ran. In this volume in this sector somehow works, and this volume in this sector doesn't. And you start picking things up, and then all of a sudden, before you know it, you're like, I've saw 7 of this type of stock run.
Yes. Yes.
So the 8th one probably is going to run.
Yep.
And
Yep.
it's
Total
just as
sense.
simple as that.
It's the
It's as simple,
familiarity.
but it's not as simple. It's
Yeah.
dead difficult to find that out.
It's like
And
a recognition of those patterns so that you can begin to see it and then predict when all those variables are in place.
yeah, and also obviously you got to think, most importantly, probably as well as the intraday pattern pre-market before the market opens. So if you've got, what you want to do is say, okay, first green day is, say you want to track all the stocks that got up and have a green day. What did they do pre-market? Did they trade 1 million pre-market volume? Did they trade 3 million pre-market volume? And then you look at intraday. Well, what did they do? Did the wash at the open and double bottom and make a higher low, then the ran? Do those intraday patterns work with the first green day daily pattern? Do you have to? And then you think, what's the best time to buy them? And then to do that, you need to save all the charts. So the best, you need to work out the ones that work, the first green days that work, which they'll have an intraday pattern that pattern works, but all of the other patterns don't work. So what you need to do is say, right, I'm going to save the charts of the daily and the intraday. I'm going to save every single first green day pattern that works. And I'm going to save all of the charts during the day as well. And then you're going to see similarities in the intraday patterns. Look, that is repeatedly a good, safe place to buy.
Yes.
That one seems a bit dangerous.
Yes. Yes.
So
the tracking has to start right at the very beginning, is what I'm hearing. You have to keep track right from the beginning.
Like 6 months in, because you don't know what you're keeping track of in the beginning. So you need to learn the variables, what makes a stock move. Then you need to learn the types of patterns, bullish and bearish, long and short. Then you need to master one pattern, which feels best as a best reflection of your personality. And then it's a case of saving charts and categorizing them. These are the intraday charts for first green day. These are the intraday charts for first red day. These are the intraday. And then you need to find the place. From your intuition, looking at the charts, what do you feel comfortable buying? At what point on the intraday do you think all these stocks work that double bottom here? Or that make the double bottom and higher lower? The ones that reclaim the VWAP, 5 of them went and 1 of them failed. So I'm definitely going to buy the VWAP reclaim the next time.
Gotcha.
And you'll develop a style that works.
Remind me what VWAP means again.
The volume weighted average price. So it's like kind of, VWAP is just an indicator of where the average of where the trades were that day.
Okay.
And the candles go above VWAP and below. So if they go below VWAP, it means a lot of the buyers are underwater and in red. And if it's above VWAP, it means the buyers are in control, but the shorts are underwater, depending on where the candle is in relation to the VWAP. But I mean, that's a lot. It's a ton of information. But I can add an attachment to show you potentially how you save the charts and how you track the formulas. And
I would love to see that.
But also just the profit and loss. You need to keep a track on Excel. What patterns work? What am I making money on and what am I losing money? Even if you're paper trading, when I try the first green day pattern, I lose all the time. When I try the first red day, I make money all the time. So what shall I do? Stop trading the first green day pattern because it doesn't work for us.
Right. And when how would you say, how long till you were crystal clear for yourself that your style was your style?
I think I traded about 12 months or 13 months, 14 months, something like that, trying different long patterns. And I just kept on losing, trading, when stocks that gapped up, I just kept on losing, buying them. And it all went down. So everything that I thought would go up went down. So I just shifted my bias and I said, I'm going to work out, I'm just going to short the ones that go down. And then I started tracking all of the stocks that gap up and go down and all of the stocks that gap up and go up. And I started working out which variable helps it go higher and which variable helps it go lower. And over time, I just knew the sectors that would fail on the stocks that gap up. I knew the type of volume that would fail. I knew the floats that would fail. I knew the dilution that would fail. And then I knew how they're all interlinked and work together. The intraday, how it fails. And then I worked out how they all work in different combinations. And then you just, cool. There's the combination. This one's going to go down. This is the combination. This is going to go up. These are mixed combinations. Might go down, might go up. I'll just give it more time to show its cards. Do you know what I mean?
I do. That's so cool. I think that's amazing that 12 or 13 months in is when you got it. I think that's a really short amount of time. Got your style.
I knew the style I was looking for. It took another 2 years to really nail it down.
Wow.
Yeah, because all the variables have got different combinations of how they work with each other. So I found the pattern in about 15 months. I thought, look, I know all the patterns. This one's for my personality. It's like I found my partner, right? I found my partner.
Yeah, exactly.
I was looking, I was on Tinder, and I'm like, this one.
Exactly.
I found my partner. I found my partner after 15 months. And like any good marriage, it's rocky for the first 2 years. You know what I mean? Like any good marriage, it's rocky for the first 2 years, and it takes a couple of years to iron those creases out. And the arguments are the big losses. When she leaves you, that's the big loss. When she leaves you, you're making the argument for my concept of attachment style might have something to do with the patterns that Trader sticks with. We'll have to test this out with you. No,
I'll give you an attachment assessment so we can find out your attachment style, and then let's see if that matches your trading style.
I'm happy to take. I mean, that's a whole other episode in itself, right? We're gonna do this every episode and see where it goes.
It is. All right. So should we recap? Should we bring it home?
Yeah, no, for sure. So just straight up, first 3 months of learning what the variables are, because that's what makes a stock move and how much it will move. 3 to 9 months, I'd say, is finding the personality or finding the partner or the pattern that matches your style, because you'll build it, right? So you'll have one pattern that you trade that works, then you'll master it, then you'll have another one that you learn and master, and you'll have another one, and then you know all of the patterns and you're the master of all. But you only learn one pattern at a time, kind of. You only master one at a time. So then 3 to 9 months is finding the pattern that matches your personality, and then you probably got, unless you're very, very talented, you've got about a 12-month stretch of mastering that pattern.
Yeah.
And monitoring how every variable affects the pattern.
Makes sense.
Better word,
makes sense. All right, so it's a combination of being in front of the market and also spending the time listening to his audio and listening.
Traders, anyone? Because look, you can learn from the ones that lose as well, right?
Yeah, for sure.
Like any manager in life, like any manager. In who you've been managed by people, I've been managed from people. Best advice I've ever given is learn what the great managers do well, and learn from the bad managers, and don't do what they do.
Totally. This was awesome. It really helps me feel more honed in on where to put the time that I have when I do have it to get to the next level. I feel a little like I'm slow moving because my day job is so busy, but the point is, this is really good to just have, I feel like I have my arms wrapped around what I can.
It's levels, right? It's levels.
Yeah, it is levels.
The beginner level, the advanced beginner, and then the intermediate.
The medium beginner, and then the beginner. Exactly.
The beginner. Like, arguably, I'm still a beginner, honestly. And arguably, we're all kind of beginners, except them crazy hedge fund people who make the millions.
Yeah, this is true. But that's a big brain. That's like 15 or 20 guys whose brains are all working together. So it's not the same as one person.
No,
this was really fun, Stephen. This was a good episode. I feel I understand it and have my arms wrapped around it more. Thank you.
But I think it can help a lot of people. I think because look, the worst thing is just first year, you're like, I don't know what I'm doing. And I'm doing all this studying, but it's not going anywhere. But then if you can think, I'm here, or I'm past that and I'm now here. Oh, look, I've just got to the next level. Then it's going
Totally.
to really put into context of where you are in terms of making it. Because, like we say, you can look at a trader and be like, you're about 6 months away from making it. You can just see
Yeah.
by the knowledge and what they know and what they're saying and how they're reading things. You
Yeah.
can someone's making calls in a chat room and you're like, you've got no clue what you're doing, but you think you do, and that's even more. If someone thinks that they know what they're doing and they don't know what they're doing, that's even more of a sign that they don't know what they're doing. If you know what I
Totally.
mean.
I would agree. I would
The good
agree.
ones are the humble ones. The good traders, I
Yeah.
swear, are the humble ones.
Yeah, no doubt about it. I would think that that would be the case for life as well, right? The people who are
Big
probably
time.
having a bigger, a more stable life are the ones who probably are a little less, you know,
Look, I mean,
big for their not big for their britches.
no, no. But honestly, though, I mean, even with me, about 6 years ago, I needed a lot of attention, and I needed to make people laugh. It needed to make people laugh because it made me feel good.
Yeah.
But now, once you get to a certain level of you've achieved certain things and you have some confidence and you've done what other people can't do, then all of a sudden you're a little bit quieter in the room. Now you're a little bit more quiet because you're a little bit more assured and you don't need it anymore. You don't need that
Yeah.
reassurance. Or is it just an age thing? Or is an age thing a direct correlation that the people have had success?
Well, I think it's possible that, you know, look, needing to make people laugh in a room is ultimately about being seen, right? And I think that's a human need. So I think when we're younger, we're not quite yet sure in who we are, and we're not quite yet sure or comfortable with the needs we do have. So sometimes we seek them outside of ourselves, and they don't always get met. And so, you know, when I see that somebody who's trying to get everybody to laugh, there's a part of me that has empathy for them. Like, what is really at hand here? They're just trying to be acknowledged. They're just trying to have community. You know, there's nothing wrong with that, but it's
But there's
just
something a bit
sometimes
not
that
met,
it will kind of,
There's a need not met
it's
somewhere, though,
something
yeah.
not correct. So
But
instead of like making somebody wrong, it's like, well, and I think as we age, we potentially get better or more successful getting our needs met in that, you know, don't show up publicly when we walk into a room. That's all.
But then bullies, they're the worst of everyone, right? What's going on in a bully's head?
Yeah, well, those bullies are people who were really not allowed to have any of their needs in their childhood. They were shamed for any of their basic human needs, to the point where they began to be so internally hostile to themselves that it spills out on everybody else. Ultimately, a bully is a person, the way they're talking to you or bullying you is the way they were bullied and the way they bullied themselves.
It's just, it's so true. But it's they're just reflecting their inner world on other people from what they've experienced, right? They're just reflecting what their experiences on, because in a way it's all they know. And in a way, it makes them feel better to do to someone else what they've had done to them. So they're not the only one, right?
Correct. That's exactly it in a nutshell. So that's why, you know, it's hard to have empathy for a bully when you're on the receiving end. But if you can begin to separate yourself, that it's really not about you, it's about them and their pain. And that's how somebody talked to them when they were little. That's how somebody treated them when they were little. And that's really hard on a child, because if your basic needs, you're made to feel ashamed about them. I mean, you're a human being, you're going to have needs, but if you're shamed for having needs, then you're going to really struggle with the journey of your life.
Yeah, it's about being educated and being woken up to thinking, hang on, I have this. I'm repeating a negative cycle, right? The bully needs to be woken up, or whoever it is, if you've got something wrong. It's like you need to be woken up to think, hang on, I don't feel good about this, and I'm passing it on. So it's about breaking the cycle, being educated enough to break the cycle before it passes on to too many people.
But what needs to be also present is a willingness, you know, for somebody to say that to themselves, you need to not make yourself feel ashamed for that. And people that are kind of bullies, they don't know how to develop themselves because they always make themselves so ashamed for being wrong. So it's like, how do you change? Well, you have to first be able to accept the fact that you're not perfect and not make yourself feel bad about it.
And nobody else is as well. And that's why the world's all going wrong
Of
right now. I
course.
mean, but I'll never forget, I've got a friend on Instagram, and I'll not say his name, trading friend. His life looks perfect all the time with his wife and stuff like that. And then he told us the other day, it's like, yeah, it's been a very difficult year. Marriage is tough.
Wow.
And I was like, your
Wow.
Instagram doesn't reflect that, mate. It looks brilliant.
Because our culture rewards people for having what looks like a perfect life, but and then most of us compare ourselves to that, and we feel ashamed because why? Well, God, look at them, they seem to got it going on and I don't. But that's why, you know, it's so important to realize that people have been culturally conditioned to only show the wins and not to show the pain.
Because
That's
they
part
get
of
praise
why.
for it. The praise is the cultural conditioning. They got the
Well,
likes
it's
and the
not just
comments and the you
praise.
look so good.
Yes, praise, but also because they're desperate to have some sort of acknowledgement. You know, they just want to be seen too. So it's not like a bad motive. It's just as if being seen by people makes you who you are, but it doesn't make you who you are.
What I've come to learn, and it's helped us massively. I mean, I'm back in Newcastle now. It's the first time in 10 years I've been here without anxiety, just because I've sorted it out.
Wow.
And not on any drugs or anything like that. Been off drugs for a few months now. Because I used to chat to you, and you used to be like, "Oh, this is a bit scary." But you saw us at some of my worst, right? So, but one of the big lessons.
I was just scared because I could see, and this is part of what I wanted to say before, like you spoke to that Instagram friend, your willingness to speak out loud to people about the places you were challenged took tremendous courage, because you never, ever pretended like things were better than they were. You were so honest on this podcast. Before I even came on, I watched some episodes. You were always honest about and that's part of what I think endears you to people, your willingness to be vulnerable, your willingness to be honest and not paint this like easy, pretty picture that's bullshit.
No, but I mean, look, it comes down to your drive and your purpose, and because you've got to have a purpose. And my purpose is just to help people. It's as simple as that. Obviously, I want to do well in the process. I want to do well for myself. But my purpose really is just if I'm going to commit time to something, I want to do well, and I want other people to do well, and that's my purpose in life. Because when other people do well, it makes me feel good. So it's win-win.
Totally.
So everything that you do should reflect your purpose. So giving people false perspectives, not telling the truth. But I mean, look, as a person, I've never just believed in glamorizing. I've never believed either like us or you don't, right? And I think you're pretty much the same. It's like there's no point.
There's no point. But you know what? We both are very lucky, because that tells us both that we have a certain level of sense of worthiness that allows us. We can afford to let people see our humanity. And not everybody can afford that. Yeah, we definitely do.
Under a level of confidence where you think if I let the too much slip in the note, but it's like
it's not confidence, it's worthiness.
People won't like them or something. People will think, oh, if I show me true self,
they won't be loved. They won't be worthy of love. Totally. That is absolutely what is connected to people who don't want to show you their vulnerability. It's if you watch Brene Brown's talk on TED, The Power of Vulnerability. It's an 18-minute talk. Can't say enough about it. She explains. I will. We'll make sure we link it.
I have a little bit of time these days.
Good. I'll send it.
I'll definitely watch it. I think you'll like it. Or whatever.
I will.
But yeah,
I will.
But just the last thing is, it's also one of the most important things I learned is it's not about, you don't get your happiness from what other people think. You get your happiness from internally the thought patterns that you have about yourself. And then how you project them will help everyone else anyway. Because if you're good inside, you've got that good positive energy and it's reflecting, and everyone likes someone with good energy. So you'll be liked anyway as a byproduct. But
totally,
it's about what's inside out, not what's outside coming in. And that was a massive thing that I still work on. Work on me inside. Not a lot of people don't, and that's why they've got shit insides and the reflex bad, right? The people who don't,
we all need to. We all need to.
Definitely need to.
And that's the key, is realizing that we're all. I just kind of feel like if we're still alive, then we have work to do on ourselves. You know, we have ways to kind of look at like, wow, how do I react or do I respond? Am I trading in my life, with my family members, with my partner, with my boss? You know, like if you react and not respond, then it's like, oh, maybe I can look and self-reflect and find what is triggering me and not make it wrong or make myself wrong, but just get curious about, I wonder where that came from, that reaction, and then try to look at it and find a way to heal it.
Yeah, and there's a lot of good and positive energy and negative energy, and there's a lot of things that will bring you down and bring you up. So it's a constant process of self-work to think, don't want that, want this. That was bad, but so make sure it doesn't affect you inside, because you don't want that repeating and changing or distorting the lens of reality that you've then got.
It's about it. One of the shamanistic teachings is, it's the wolf that you feed is the one that's going to take over your life.
It's a very nice one. So it's not just the ego and eliminating the ego. It's not. It's like, it's the wolf that you feed. It's not the ego, and you've got to kill the ego and the ego is evil. It's the ego's all right if you feed it if you feed it with the right knowledge and information.
Exactly. Which one do you feed? And that's
Say it again. That's really, really good.
It's which wolf do you feed? They talk about, the wolf that's kind of the healthy wolf. I'll get the exact quote for the blog post, but there's going to be the dark wolf, and there's going to be the kind of more. Remember, I talked about the capital E ego, the lowercase e ego, and it's that. Which one are you going to feed? The capital E ego is kind of your higher self. The lower E ego is the one that is dependent on the trappings of success, like having a label or the successful pocketbook, or like all those things are or having to win every time. Like the capital E ego is like, okay, I didn't win. I'm not going to make myself wrong, but I'm going to learn so that I can take that into the next situation.
But there's it's funny because we're going through almost, I know that there's 8 centers, right? But they're not centers.
Chakras.
There's 8 chakras, but I'm not talking about that, but it just reminds us, because you've got your brain that thinks, and then you've got the lower E ego, which is very easy to feed, but then you've got to push above that to the higher E ego. Be like, totally. This is the one. It takes a bit more work. It's easy to feed the lower E. It's easy to eat junk food and drink and escape reality. It's easier to do that. You've got to do the harder work for the long term.
Totally true. That's what The Matrix is such a great movie, because, Morpheus gives him the choice. Do you want the red pill or the blue pill? Ultimately, we are choosing every single day the red or the blue pill.
Yeah. And look, and the good thing about the brain and the mind is, if you choose the wrong pill too many times in a row, you will feel like shit. And you'll think, need to do a bit more work and choose the other pill, because I'm not happy when I take the easy option.
I agree.
And then when you take the other pill, you start thinking, sure, feel pretty good this morning. Must have been that work I did on myself yesterday, whether it's 30-minute meditation or some breathing or whatever it is.
Absolutely true. Absolutely true. This was an unexpected part 2 of our episode today. So this was fun.
Yeah, no, it's super cool. We'll definitely have to rewrite the introduction, and it's the basics of trading, and it's just the basics of life.
Yeah, it is. It absolutely is. It's awesome. All right, so we'll say goodbye to our lovely audience.
Yep.
Okay.
They'll be left in the clouds somewhere.
Exactly. So we'll see you all next time on the Steady Trade podcast. Stephen Johnson, Kim Ann Curtin saying aloha and a hui ho for now.